Good morning. It's April 25th, and this is To My Liberal Friends. Well, April 15th has passed, and that's the annual date that all federal income taxes are due. Now, since I have multiple CPAs in the family, it's a stressful day for them as they rush to get all the returns done and submitted. But once that is done, they turn to the next year and start sending out material to assist their clients in preparing for the next tax season. With that in mind, I'm looking at where the tax code is headed and the impact this November election can have on the tax situation of each and every taxpayer. In 2017, the Congress passed the Tax Cuts and Jobs Act. This was Donald Trump's signature tax bill, and the Senate was shepherded through by my former boss, Senator Orrin Hatch. It was passed in the Senate under what is known as reconciliation, a budget procedure that allows the Senate to avoid Rule 22, the filibuster rule, and pass legislation by a simple majority. Now, from the outset, I want to state that I have always opposed using this budgetary maneuver to pass major legislation, and both parties have abused this and used it to pass some major bills, basically tricking the system. The whole purpose of the process was designed to bring spending and revenue into sync. This process was put in place in 1974. It's been amended several times, and once it was allowed to be used at the start of the budget procedure, it became a regular feature. Joe Biden has used this process to pass his $1.9 trillion economic stimulus plan, known as the American Rescue Plan. In my opinion, this was a major component of inflation. Because this is budgetary procedure, any laws passed under this process have a 10-year lifespan, the length of any federal budget plan. That means the Tax Cut and Job Act, passed by Trump and the Republicans in 2017, will expire in 26. For that reason, it's something that every taxpayer should be paying attention to and watch what candidates say about the bill. After the passage of the bill in 2017, Democrats ranted and raved that this was a tax cut for the rich. They made this claim because the top tax rate was reduced from 39 to 36%. They basically ignored any tax cuts that flowed downward from that to the middle class and other taxpayers. The media bought into this theme and repeated it over and over, claiming Republicans were only giving tax cuts to the wealthy. But eventually, the data would prove that the 2017 tax bill benefited everyone and in some ways was better for the middle class. Income data published by the IRS, not what some politician told you, not what some media channel told you. The IRS clearly showed that on average, all income brackets benefited substantially from the tax reform bill, with the biggest beneficiaries being working and middle income filers, not the top 1%, as so many Democrats have argued. A careful analysis of the IRS tax data, one that includes the effects of tax credits and other reforms to the tax code, show that filers with an adjusted gross income, their AGI, of $15,000 to $50,000 enjoyed an average tax cut of 16% to 26% in 2018, the first year the Tax Cut and Job Act went into effect, and most recent year for which data is available. Filers who earned $50,000 to $100,000 received a tax break between 15% to 17%, and those earning $100,000 to $500,000 in adjusted income saw their personal income tax cut by around 11% to 13%. By comparison, no income group with an AGI of at least $500,000 received an average tax cut exceeding 9%, and the average tax cut for brackets starting at $1 million was less than 6%. Now, what's that all mean? It means most middle income and working class earners enjoyed a tax cut was at least double the size of the tax cuts received by those earning $1 million. And I'm talking percentage of their taxes, not their overall dollars. Because when you talk about just how much they paid in dollars, you got to talk about how much they got back versus how much they paid in. This is data from the IRS. And Democrats tend to ignore it and focus, like I said, on how many dollars higher income taxpayers got in the reduction. But they never mention how much those people are still paying. It's really a game of smoke and mirrors when they discuss tax policy. Well, enter Joe Biden. This week he stated the following, quote, Donald Trump was very proud of his $2 trillion tax cut that overwhelmingly benefited the wealthy and the biggest corporations and exploded the federal debt. That tax cut's going to expire. And if I'm reelected, it's going to stay expired, end quote. Once again, Uncle Joe does not fully understand what he's saying. He's just parroting some talking point provided by his staff and hoping the voters don't realize it means their taxes are going up. As I said, the 2017 tax bill reduced the average rates for taxpayers at all income levels because it lowered marginal tax rates, widened the tax brackets, doubled the child tax credit, and zeroed out personal dependent exemptions, nearly doubling the standard deduction, and limited several itemized deductions and the alternative minimum tax, among other changes. Well, Joe Biden will use the liberal talking points by saying he wants the wealthy to pay their fair share, never saying what that fair share is or what percentage of the taxes they actually pay. He'll try to buy votes by saying, I will tax someone else and not you. I will eliminate your student debt and ignore that the taxpayers have to shoulder that burden. He will continue with his tax and spend policies until the nation careens into bankruptcy. Our national debt in March stood at $34.5 trillion, and that's a $2 trillion increase just from last July. What both Trump and Biden should be focusing on is not how much the federal government is bringing in with revenue, but how much we are spending, and that means instead of focusing on tax cuts, we need to focus on spending cuts. This has been To My Liberal Friends. Thanks for listening.